Hello, everybody, and welcome back to DerekInvests. It's been a minute. I took a few weeks off from doing the live shows every single day. Back now, so we're going to continue on our march forward for all of you and all of you investors out there. You long-term investors and traders, you swing traders, you day traders. This show is for all of you because what I do supersedes the time frame that you work in. You're able to work in whatever time frame you see fit by simply adjusting your chart. So we have one day to election. All right. Everybody's screaming that this election is the most important election in history. I have to tell you, I have heard that every single election of my life. All right. Think what you want about this election. I'm not telling you how to feel. What I am telling you is that I've heard that every single election of my life. Okay. And, I'm not a fresh young chicken here. So take that as you will. Now, what I will tell you is you can trade elections. There's no doubt about that. So if you're a swing trader or a day trader, predominantly, you can trade elections. And so what you'll see going into elections are the major drivers of that particular market. So whatever year you're working in, obviously, we are in 2024. What's driving the market right now? Mega caps. Which mega caps? The Magnificent Seven are driving the market right now. So by going through, and thankfully this year it's pretty easy, by going through those seven positions, we can have a very good idea of what the market plans to do following the election, regardless of the election results, if there are in fact obvious setups in these seven positions. Now, I can tell you that in elections, for me, it's been 50-50 throughout my career, whether or not there were some obvious setups or whether there weren't. I can also tell you that traditionally, an election is a blip on the screen if you're a long-term investor. The only difference I can see in this election that I've seen in others is bond yields, specifically treasury yields. And the fact that the Fed cut rates by 50 bips, we're assuming they're going to cut by 25 more bips this week. But even with the 50 bip rate cut, the 0.5% rate cut that we received over a month ago, rates have done nothing but go up. So you have to assume that a change of guard might be seen as a good thing there, because right now the path we're on, it's not having the impact that it should have. So maybe that's a little different. I haven't really been in a situation like that before, right? I mean, it just wasn't. I mean, when Obama was elected, would have been the closest kind of scenario because, Bush was in office. We're in 2008. The market is literally collapsing. We're having crashes each day. And so maybe in that election, you could say there was if you felt like there might be some movement based on the election results. Although back then, the market was already in a free fall type crash. It was going to stop when capitulation occurred. So I think this might have more impact. I don't know. I'll leave that up to you to decide. What I can tell you is that what we're going to do is we're going to look at the Magnificent Seven. And if those seven mega caps show similar structures and setups to any particular direction and price, you can be fairly certain that is where the market's going to head. So let's take a look. Let's jump over and start looking at some charts. All right, I'm not going to get too much into the indexes right now, although there is some interesting conversation to be had about those. I'm not going to get into that too much right now. Let's just stick to the story at hand. That's the NASDAQ. As you can see, the NASDAQ doesn't tend to fare well when you sit at high, folks. When you sit at highs, I'm going to probably talk about this more tomorrow. And I'm going to try to go live on each individual channel from now on. So maybe you can ask me some questions. But I don't think that most of these, I go through Restream, and I don't think this service allows most of these different social media platforms to show me live. Let me actually also hide this stuff. If you're not following me on Twitter, that's a big mistake. It's at DerekInvests. That's my Twitter handle. I put a lot of information out there. I will tell you that information is simply information unless you know how to decipher it. So I'm going to move that. Let's get that out of the way. And let's just get moving. We're going to take a look at Google and Microsoft at the moment, and let's see what we see. All right, so Google, for example. Google, if you look at it on a monthly chart, what are we going to look for? We're going to look at structure, and we're also going to look at volume. Is there any volume here that tells us there's anything to fear in Google at the moment on a monthly chart, which would probably indicate a global economic situation? This would be large institutions all doing something at the same time. I don't see that. I'm sure you don't see it either. Do we see any volume here recently in the recent weeks? I would say yes. There was some significant volume in last week, and it reached back up to the high, pulled back down. This week, we're starting down. This could be an indication of something to come, because if you look at this volume bar down here at the bottom, for you folks that aren't aware of why we look at volume so closely, is because volume that stands out, large volume, can only be created by one group of people, and that's institutions. That's banks, that's brokerages, wirehouses, you name it. Big institutional desks are the only people that can give you volume that stands out from the crowd. And this volume definitely does stand out, especially recently. Now, this is a weekly chart, so you have to go back to, say, April of this year before you can find volume at the level of last week. Last week was not a good week in Google. That was a reversal. Let's move into a daily chart. Let's see what we see on a daily chart, everyone. All right. This is a gap up, and we know this was into earnings. It gapped up, and guess what? It's already filled the gap. For those of you that don't know, a gap is nothing more than what appears to be a hole in price. It's that hole right there. So when you go from October 29th to October 30th, your price goes from a high price of 171.86 into a low price of 175.75 on the 30th. So that's a pretty significant gap in price, and gaps tend to fill specifically on indexes. But what gaps often indicate, especially a gap up in price as you're getting a rally, is a stock trying to create FOMO, a stock trying to create a fear of missing out. You believing that you are missing out on something big. There's also something else significant about this, the 30th, October 30th in Google, and that's really simple. It filled the last remaining gap on the way down. When prices gap down from a high price, that typically means institutions are in fact selling, and they sold a little too much. They dropped price a little too much overnight, and now they're going to want to come back up and try to sell at that price again. That's what you see. This is extremely high volume on a daily chart. On the 30th, there is 1, 2, 3, 4. There's 4 places, not even. I mean, technically, there's only 3 days from what? Is that this year? Yep. There's 3 days this year that had the volume of October 30th of this year. So that's a big deal. That's a very big deal. Okay, so let's zoom in a little bit. Let's see if it tells us anything else. I'm going to go straight into the hour. I'm going to tuck that up a little bit there. There's your volume. There's your 30 minutes. Okay, it's filling that gap. Is there anything? We'd be looking for an indication of an upward move right now. Now, all of a sudden, you see a small gap up right there at 172.77. That did not fill today. All right, if you were looking at Google, you would most definitely, without a doubt, say this is set up for a down move. Google is set up for a down price move down. All right, Google looks like at bare minimum it needs to come back down to 150. Most likely lower, to be fair, because even if this is your A move, your C move is going to bring you lower. Google. So I'm going to go ahead and put this up. Google. (11/4/2024). looks poised for a price move down. Okay. Following the election. Let's get a picture of that. That's Google. There is no doubt what that chart is telling you. And if you would like to know what a good price target on there would be, there is a glaring price target. Absolutely glaring. You can reach out to me via my email, dmiller@prometheaninvesting.com, if you are interested in doing some one-on-one education with me. Let me throw that up for you. Again, dmiller@prometheaninvesting.com. I do one-on-one coaching with folks that are very serious about learning how to invest, and learning how, whether you're a long-term investor, whether you're a swing trader, or whether you're a day trader, I teach them all. I have some supplemental guys that my day traders I send to so that they can learn a bit more about the flows of the day. I do believe in following the Greeks. If you are a day trader and you are not aware of the Greeks or what that means or what flows mean and how flows function, that is a big, big mistake. I actually, let me see here. I think I have it set up already. If you go right here and you click on that QR code, that sends you to a good friend of mine over at Vol Signals. He also has a company, Vol Studies, where because of effectively he's teaching you the flows of the market. If you click on that QR code and you use coupon code Derek10, all capitals Derek, DEREK 10, that will get you a 10% discount off of any product with Vol Signals. And if you're a day trader, I would encourage you to do that. If you are wondering what the price target on Google is, you really do need to get involved with my one-on-ones with me. And if you're serious and you're working with some money in the markets, I guarantee you that you will be glad that you started working with me. There is a price target on there that I can tell you for certain will not be missed. It is extremely obvious. Let's take a look at Microsoft. Let's zoom out to a monthly chart. I can tell you that what you always want to do is you want to start with a monthly chart. A monthly chart gives you a great picture of the history, obviously, and also a great picture of volume. Volume is really important on a monthly, and I'll tell you why. Because on a monthly chart, volume is your greatest indicator of the long-term kind of direction of that company. I have to tell you, recently, I have not liked the long-term direction of most stocks that I look at. They do not look good. Okay, they do not look good. Let me repeat, they don't look good right now. Sitting at highs like this on Microsoft, this is definitely negative. Okay, bottoms are shaped like V's because people capitulate. Tops are long, elongated. Why? Why are they plateaus? Because institutional money needs to sell off their positions. That's why. Now, we can see there was a gap down. Okay, we just discussed gaps a minute ago. There's a gap down on earnings. All right, and what's above you is about 430. Now, what we are looking for are setups to the upside or downside going into the election. When we looked at Google, I think it was fairly obvious that was set up for a downside move. It looks to me as though short term, Microsoft is set up for an upside move. All right. So I'm going to go ahead and zoom in a little more. Yeah, I mean, Microsoft truly looks like it's poised for a move to the upside, not the downside. So let's put it up. So right now, it looks like we have one poised for downside, one poised for upside. I mean, that's what it looks like to me. Let me turn these blue. There we go. Microsoft. Microsoft is poised to the upside. Okay. That's what it says. That's what the chart says. Chart says that thing is looking to go higher. You know, sometimes when you do this, and any of you that have tuned into my lives long enough will know that sometimes when you go in and you're looking for a conclusive evidence of something, there isn't any. And what you then have to do is, and what you should always do first, by the way, is you should evaluate the index itself, which we didn't do today because I've done so much of. Let's look at Apple and Amazon. And sometimes that index will give you more than even the leading stocks within that index. I mean, you look at an Apple, this thing's reaching. From a structural standpoint, you're looking down for sure, without a doubt. And something you're going to notice is all of these stocks so far are sitting at highs, and that is never a good thing. No matter what anyone tells you, anything sitting at a high, plateauing at a high, is negative. And when you see higher than average volume popping to a higher price like this, in the 90s, that was something that people looked for and loved. You do not want to see that right now. That is not a good thing, and that is not something you should love. We see two spots at the highs right now on Apple. So let's zoom in. That's something not good. This is something not good as well. That's at a high price. All right, Apple is definitely poised to move down. I'm not even going to go on. This is very obvious. Apple is poised for a down move. All right, now I got to change all these to red. You know, I really should coordinate this before I get started, so I'm not running around changing things from blue to red and red to blue and so on and so forth during the entire program. But I don't, I don't have time to do all of that before I do this. I know everyone's a trillionaire online, and they have this amazing business that they're making billions, and they're gonna teach you how to make billions. But the truth is, most of what I do online is information just to help anyone who's looking for help. That's the truth. Most of my business comes from people that I meet in person. I would say 99% of my business comes from people that I have met in person or do meet in person, and they are looking how to invest and they're interested. A lot of them are most people that are looking for someone like me. They're professionals. A lot of them happen to be in sales, which is it makes sense. It makes sense. You have to have some level of you have to be able to handle uncertainty if you're going to be a trader or investor of any capacity. Uncertainty can't bother you, and if uncertainty does bother you, it's just not likely this is going to be for you. You're probably going to hire someone to do some asset allocation for you, which I don't have any problem with asset allocation. The market does go up over time. You do limit risk with asset allocation, but what I can tell you is you are wasting quite a bit of money hiring a financial advisor to do asset allocation. Asset allocation is extremely, I repeat, extremely easy. Now, I'm putting up right now a QR code for 6 weeks of group-led study, my VIP mentorship financial EQ mastery course. Now, what I've done is I've taken that course, I've actually built it into an active PDF that has links to all the videos. It has step-by-step instructions. It's 69 pages long. That's not a joke. It just happened to be that long. It just is what it is. You will set up a proper financial plan. You will learn the ins and outs of the stock market, how it was built, why it functions, how to set up asset allocation, how to set up an account, for God's sakes, how to transfer your money in there. It will teach you everything you know from you don't know anything to funding an investment account and setting up your asset allocation, all for under $500. All for under $500. I don't have any problem with asset allocation, and I tell people that all the time. What I also tell people is that you are spending too much money. You're paying someone 1% a year to do something you could do for yourself an hour a month. It makes no sense. This is something that, an eighth grader, a sixth grader, and in today's world, a sixth grader could grasp setting up a financial plan and an asset allocation model inside of probably 4 hours of education. So I'll put that up there for you too. If that does interest you, if that's you and that's what you look at, please head over, take a look. I put that into a course for a reason. It makes a lot of sense. Here we are at Amazon, everybody. So Amazon, gosh, it's barely above its 2021 highs. There's not a lot here. Why is that? Well, Amazon is QVC for the internet. Let's face it. I mean, don't try to paint this company as something that it's not. It hasn't broken a new high since the July 11th highs. This thing looks poised to go down. I don't have to go beyond this chart. Amazon is poised to drop. Period. I mean, it's poised to drop. If I'm looking at it right there, long term, unless there's something major that happens with that company, Amazon's one of those companies that I wouldn't touch with a 1,000-foot pole, and I would be absolutely selling right now. Period. I would never hold this company. A major change will have to happen before this thing means anything again. It's QVC for the internet. And everyone's like, yeah, but they deliver and da-da. Yeah, they deliver their products to your house. So they are a UPS and a QVC all combined. I mean, I'm not knocking Jeff Bezos. I didn't think of it. He did. That's why he has all those yachts. But I'm just saying, like, to pretend that this company is something that it's not is silly. And if you look at the volume right now, oh my gosh. If you're holding this, please, for the love of God, and you're not sure why you should sell this, reach out to me. It is dmiller@prometheaninvesting.com, dmiller@prometheaninvesting.com. Here, look. If you don't know how to find me, jump onto my Twitter, DerekInvests. I have all sorts of social media, but there's my email address. Ask me about one-on-ones because you should be able to read this chart with, I was going to say read this chart with your eyes closed. I don't know how possible that is, but there is that chart is extremely obvious. That is something you could probably short right now. I don't know that you'd even need to worry about stops, but if you did, it would be a really tight stop to the upside, and you probably could sit there and hold that thing until it fell to what? I mean, you could easily hold through 145 right now. All right, Meta. Let me back out of this. Let's go to the monthly. I do like uniformity in my analysis at all times. Oh, gosh. I mean, like, if this isn't parabolic, all because Zuckerberg said that he was going to introduce AI to Meta, I don't know what is. It's not awful. This chart is not awful. There's no volume here. There's a lot of volume in the buying in the background, but that's down to 120. I mean, my goodness. Almost 500% from there. You're definitely getting sticky around 480. You're sitting at 560 now. All we really want to know is there a setup for a downside or upside move after the election? And I think with Meta, we're just going to have to say there's no clear answer. We don't know. There's nothing there. Does Meta seem extended? Yeah. However, I like to see selling. I like to see institutional selling before I decide whether or not a stock price is going to rise or fall. I don't see institutional selling there. There are some standouts in the hourly chart, but all in all, there are no standouts on this chart. So I'm just going to stay away from it. I mean, I can't make up whether or not something's going to rise or fall. I have to evaluate the chart as it stands in front of me. So we need to look at Tesla and Nvidia. Let's pull up Tesla. which you would think definitely would have a positioning for this election, because, Elon has been such a standout supporter of Trump that you would think something happens. There's some reaction. There's some reaction if, based on this election, this is not good. I would say that Tesla, it has downside. Tesla looks like it's poised to the downside. So I have to tell you, if you were looking at that alone, you would say somebody's betting on Kamala. Because now there's a lot more to Tesla than this election. But right now, this conversation's about the election. And it looks like Tesla's poised to move down about 20% pretty quickly, too. Yeah, about 20% pretty darn quickly. Woo! And what I say in the video? Trying to break to new highs. Gaps are filled. Let me go out to a monthly. Even though on this one, I don't really like the monthly chart for obvious reasons. Let's see. Week. There's not a whole heck of a lot here. Let's see if there's something as we. So, for those of you that are new to the channel, as you zoom in, things will show up that didn't show up in longer term charts that sometimes will give you just an idea of where something is going to go. You know what? Tesla's another one. Nothing here. There's just no direction. There's nothing here. It's not good or bad. There's just no clear-cut direction. So we have two of them that don't really have any direction at all. All right, let's see. Is there something else worth looking at while we're doing this? Right now, no. I mean, I just don't see anything right now that is worth taking a look at. I mean, perhaps we could look at the indexes, but I think we'll do that afterwards. Let me see here. So what did we get? What was our result here? What was our result? Take a look here. Let's take a look at what the result was because I can't remember off the top of my head. All right, here we go. So let's take a look. So we have Google is poised for price move down. We have Microsoft poised for a move up. We have Apple poised for a move down. So 2 down, 1 up. We have Amazon poised for a move down. That's 3 down, 1 up. We know we have the two that show us nothing, which is Meta and NVIDIA. So 3 down, 1 up, 2 neutral. And for the final, Tesla looks like it's poised for a move down. So it looks like the market wants to move lower regardless of election results. That is what this market says to me. When I look at this market, that is what I see. I see a market that is ready to move down regardless of the election results. I mean, you have 4 down, 1 up, which is good, 1 up. and then you have 2 neutral. So I would say for your mega caps, it's looking negative after the election. So everyone, that is it for today. I'm going to start going live on each individual channel so I can chat with everybody starting tomorrow. I'll announce where and when as I'm kind of going through. If you have any ideas on where you would like me to show up, like if you're watching more of me on X, or if you're watching more of me on Facebook or Instagram or LinkedIn, please shoot me a comment, like shoot me a message, let me know, and I'll start showing up in those places. Once again, Twitter, DerekInvests. This is a great place to find more of my information. I post a lot of charts and stuff there. I'm not as active on there as I was because I didn't find that there was a ton of interaction from the posts. Most of my interaction comes from people that reach out to me outside of the live video. So that I primarily get emails and DMs. I mean, that's really what happens. But if you need to email me, if you're ready to take the next step, if you're tired of living through every bear market that shows up, if you don't realize there is a way to identify tops and a way to identify bottoms over the long term, even swing trading, reach out to me. If you're not sure, if you're day trading and you think that flows don't matter, or you're looking for another way, another piece, another tool in your toolbox to help you day trade, not only is working with me great, but so is working with Vol Signals. And I put up the information up on Vol Signals there. You go to Vol Signals. My coupon code is Derek10, all caps, DEREK 10. Plug that in. You'll get 10% off anything you do with them. Great guys, great team. I've known them for a while now. So in any case, thank you all for joining me so much today. Remember, if you're not good up here, you're not good anywhere. If you're not feeling good today, get outside, go for a walk. This election stressing you out, I suggest that you do 2 things. 1, get your body moving. Smile, fake it till you make it. And then 2, and I mean this, check yourself for what's important in life. Online and on that TV, they're telling you that this is either the end of the world or the savior of the world. It's neither of those things. All right. Be involved in the process, but be realistic with the impact that it has in your life. Pay attention to your local, your city, your state. These are the places that you may have an impact on politics. Now, if you're like me, I live in California. Nothing I do has an impact on politics. The people that are in there, and they continually get voted for. And that's just the way that goes, right? And there's other states like that. But if you're in a swing state, even if you're not a swing state, I care about my local government a lot. Okay, local government climbing the ladder. I care about my state government a lot. I care about the federal government, but I realize my impact is smaller. So you really do need to think about that. If you enjoyed this broadcast, please feel free to share, like, subscribe. I have a YouTube channel as well, Derek Invests or Derek Miller Invests. It depends on where you're looking, but I am, in fact, everywhere. Thank you so much for joining me. Always remember, everybody, that every day above ground is a good day. Thank you so much for tuning in, and I'll see you all tomorrow.